Are you wondering if an installment agreement is right for you? Setting up a monthly payment plan may be your best solution to resolving your tax problems. There are a few basic types of installment agreements available from the IRS. The first and most simple type is what's called a guaranteed installment agreement. Now, this type of installment agreement is actually guaranteed to you under the law, but it's only for taxpayers that owe $10,000 or less. The other types of installment agreements get a little more complicated and are usually for people owing more than $10,000. The first type is what's called a streamlined installment agreement. Now, this is for taxpayers that owe an amount of $25,000 or less. The way this installment agreement is set up or calculated is by taking the total amount of tax that you owe, adding to it the amount of penalties and interest that have accrued, and making sure that amount totals $25,000 or less. Now, you can find out the minimum monthly payment the IRS will accept on this type of agreement very easily. All you need to do is take the total amount that you owe, including your penalties and interest, and divide that amount by 50 months. This will give you the minimum monthly payment the IRS will be willing to accept on the amount that you owe. The next type of installment agreement is what's called an installment agreement, or an installment agreement based upon a verified financial statement. Now, these installment agreements are for taxpayers that owe $25,000 or more, or for taxpayers that cannot afford to make the minimum monthly payment on a streamlined installment agreement. Now, these type of agreements start becoming quite a bit more complicated. And the reason for that is with this type of agreement, you're going to be required to provide financial disclosure on what's called a collection information statement. What you need to do is disclose your assets and your income and expenses for your household. The amount that you pay on this type of agreement is going to be based on what that verified financial statement shows you have the ability to pay every month. Lastly, there is a type of installment agreement for taxpayers that allows them to pay off less than the amount of tax that's actually due. Now, no, this is not an offer in compromise. It's a type of installment agreement. It's called a part pay installment agreement. What it does is it allows you to pay a monthly amount, again based upon a verified financial statement, but only up until the statute for collection expires on each period. As the collection statutes expire on each period, that debt will fall off and you'll continue to make payments on the remaining debt. The benefit is you pay what you can afford, what the financial statement shows you have the ability to, and you actually end up paying less than the amount due in the long run. This is often a good alternative to people that maybe would have been qualified for an offer, but were on the brink, it didn't quite go well, or they had an offer rejected. At any rate, if you would like more information on any of these types of installment agreements, we can definitely provide that to you and answer any questions that you may have. You're welcome to give us a call. The number is toll-free. It's 888-744-7171. Again, that's 888-744-7171. You can also visit us on the web at www.etaxrelief.com. At eTax Relief, we are here to help you.